All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm just doing a quick audio check here, making sure it's coming on through. There were a few adjustments made to the system this weekend, so just double checking. Yep, there we are. Good deal. Alrighty. Hope you had a fantastic weekend. Extended weekend here for the markets, and holiday weekend for many. And hope you had a nice one with family, friends. Market's getting back at it here this morning. We're seeing a gap down in the market this morning. It's not an incredibly aggressive one, where you go, wow, something dynamically changing. Here's a 1 hour chart of futures, and so you can see kind of here over the past weeks, right? I know the perception is, man, the market's just been surging, but over the past weeks, market's just been stuck, right here at this 2,900 level. I've just been absolutely stuck here. Now we're on the third week of being stuck here. So, it's one of those where, just the market's not really getting a lot of traction to it in either direction. We have seen some fireworks in a few areas, especially in healthcare, but we've seen some energy come back to life. But, in general, market index-wise, not a whole lot has been going on there. We've seen the market vibe stay at neutral. And, it's been one of those where, we just haven't seen enough movement in any of the internals at a fast enough pace to suggest something different going on out there or something, really, really taking shape or changing its stripes. Could there be some things? Yeah, there could. It could happen at any time. We have earnings season ongoing here. We continue to have economic data, Fed talk. But the story of the market kind of still remains the same. The story of the market is still, we're still talking about a pretty Teflon coated market here as far as good news versus bad news. But in all, investors are trying to digest earnings season and what's going on with earnings season, and we have about 15% of the S&P 500 that's reported earnings so far. So it's a small number. But generally, it's a big enough number to say, hey, look, this is what the end result after all 100% report earnings is what things are going to look like. Right? It'll alter, it'll change just a little bit, but most earnings seasons after this many, the numbers are in, and the number here is 5%. Now, what's that number? 5%. Well, 5% is the revenue growth. That is the revenue growth for the S&P 500 companies here this quarter. You said, well, okay, good, bad, what is that? Well, 5% is growth, right? 5% is growth. The last time the growth was this low was back in 2016. So what do we have? Well, we have that same type of picture going. Well, we're still growing, but it's falling. The growth level is falling. That's nothing new. We've seen that in the economic data. We've seen that in individual corporate earnings. But we're not talking about revenue contraction, right? And so the arguments stay the same. For the bears, they say, look, it's slowing and it's going to get worse. And the bulls say, well, it's slowed a little bit. Who cares? It's going to pick back up. The arguments haven't changed. In fact, the arguments are exactly the same as what they have been. Now, individual stocks, individual companies, is there a different story going on? Is there a different theme going on? Yeah, for sure. But in terms of the general market, in terms of the overall picture, it's that same story. It is that exact same story, and we're not seeing that change here with earnings season, at least so far. Do find the energy action very interesting here so far. What we saw from Schlumberger on Friday, what we're seeing from Halliburton this morning, and both of them reversing hard. In fact, if we come to it here, you can take a look at Halliburton and, gapped up on Friday, sold off, gapped up today, selling off. Friday were Schlumberger earnings. Today, Halliburton earnings. You can see Schlumberger on Friday, the gap up and kind of swift, hard sell. We have oil up nicely on on action taken by the U.S. to basically suspend or basically to, fully implement the rest of the economic sanctions against Iran. So we see that coming in. That's helping to boost oil. So we see something like Chevron trading on higher this morning, an Exxon trading on higher here this morning with it. But we're not seeing those individual drillers or the drilling services sector, really react here to it so far this morning. If you take a look at something like a Valero, there's a very nice chart, very bullish chart in terms of its action, in terms of its gap up this morning, breaking the high from yesterday very early. So some very positive action with that, but we're not seeing it in the Schlumbergers and the Howes. It's very sectoral when it comes to the energy sector, and different groups inside the energy sector, are performing very differently, and I suspect we'll continue to see that. Okay, so anyway, that's kind of the market open here so far. A few upgrades, a few downgrades. We saw Akamai, upgraded this morning. I've been watching it this morning to see if there's an opportunity to be a buyer. I haven't stepped in. We saw another downgrade on Tesla here as this kind of pushes back into the 265 area. It's just kind of a continued lower high, lower low story here on the chart. And, not a whole lot, not a whole lot. We're down here near support. Could it bounce off these levels? It sure could. But when you hit lower highs like this for this long, generally supports ultimately break. So that's kind of what I'm expecting that we will see. We had some interesting reversals and things like J&J last week, but popping on back here, today. We had option expiration, and then we have a 3-day weekend. Some of the price action a little erratic, and some of the price action, ultimately kind of shaking out a little bit here this morning. Okay, so anyway, that's kind of my thought on the market, here this morning, and kind of where things sit. So let's jump over to the challenge, the automated challenge here, and entry triggers here this morning, none. There are no triggers here this morning, and I'm not too surprised by that, but there are some things that are getting close. There could easily be some things here this afternoon, but no new triggers here as it sits this morning. So if we come into our test trades, our kind of our normal basket, I think that's what I'll end up calling it. Our normal basket is still in all cash. Our short-term basket is in a Netflix put, which is getting hammered here this morning, and it shot above the 363 level. Let's see where it is right now. 363. Yeah, it's 368. So going to pull this off. And let's make sure we get the right one. 3rd of May, 352.5 put. 3rd of May, 352.5 put, going for 241 to 250. So we'll exit there at we'd get a fill pretty easily at 242. I'm not going to try to trim it all that much here. So 242. Okay, 242. And it's now closed. All right. Brings up a couple of very interesting discussion points and goes to some of the questions that I've had come in here on this over the weekend. And so let's go take a look at some of those. One of the questions that came in was, Jeff, why not exit when a stop is hit? Why wait until one of the 2 times a day when you adjust this? And very good question. We could run it. We could say, hey, you know what? When the stop hits, go. We could even set some automatic trading there with it. But, as you see, this is test 22, right? This isn't test 1. This is test 22. And in terms of the algorithm, in terms of the entry exit, we could go out, and I've tested going out and saying, look, when it hits the stop, we just absolutely make an exit. I make an exit, I'm done. But what happens with that is it creates to where, a trade could happen at any time of day. Which part of kind of getting this up and rolling and going and over the years testing different mechanics of it has been so that we don't have to have it so that any time of day, a trade's made. Everyone knows, okay, when are the trades, what time of day are the trades going to be made? I find that to be a very important element to bring into it. So I've had to test and I've had to say, well, is that feasible? Is it reasonable? And one of the things that we've seen is that it's kind of been a wash. Yep, this type of thing can happen where it breaks the stop level and just keeps on going, right? And by the time I get out, it's $5 late, right? It's $5 further. But we've also seen where they get the whipsaw, where, okay, it surges above that price and then whipsaws back on down and then boom, carries on the way. So it's been kind of a balance there for it. The test that we ran, or the two tests we ran, looking specifically for that, we actually saw that it performed better when we exited right at the stock exit price level. That it was slightly better, but the improvement was very slim, was very small, so not something that I say, hey, you know what, I want to alter the nature of this, or want to take away that ability to only have two time frames, to make decisions on. So anyway, that's why. Another question that came in, what's the point of sharing the short-term options basket? And last week I talked about, hey, when the challenge goes live, with this, most likely going to be running with this basket down here. And I talked about the survivability, right? And I talked about the fact that this short-term basket has no survivability. If there are 3 to 4 trades in a row that go wrong, or they go the opposite way, it can't survive them the way that this basket down here can, the 30 to 60 day. And over the course of the challenge, the odds are that we will have 1 to 2 of these streaks. And so it has to be survivable. It has to be survivable. It has to be able to, survive this element. Now, so far, right, what's it proving? It's proving that it doesn't have that survivability. In fact, I'm a little surprised that it's survived as well as it has, given 3 in a row to the downside. I would have expected to see about a $2,000 loss here, and I guess it's close. It's close. What, $1,500 down there? But this basket doesn't have survivability, so why do I show it? Why am I going through it? Well, because my ultimate hope for the challenge is this, that I'm able to run with this basket right here, down here below. But once gains start to kick in, we're able to do a little bit of shift. That we can take a portion of that money and start to play, not only play the trades on the long-term basis here, but take a smaller portion of it, of the challenge. So let's say the challenge, jumps up to, 15,000, right? We're able to take 3 or 4 or 5,000 of it, right? Now, let's just say 5,000 of it. We throw it in one of these two baskets. We play that short term. So if we get that drawdown, it's not going to kill the challenge. But one of the things about these two baskets is they're explosive to the upside. Yes, this basket down here has upside explosiveness, but not like these two. These two have upside absolute explosiveness, and when you're dealing in a trending market with some gains, I want to be able to put some in there. But ultimately, this whole test, this Challenge Test 22, is being used as a training, teaching, learning tool for how the whole system works and operates. And, wanted to have these in there to kind of show that difference. We're getting kind of what I've expected. But this is also one of those where, let's say, hey, you know what? If it had been 3 in a row gains, right? The question coming in would, well, why don't we just do this one? Well, we're going to have the 3 in the row gains. We're going to have the 3 in the row, 4 in the row losses. It just overall, long term, it's not very survivable, but it's very explosive. So, when going live here with it, after a certain amount of gains down here, I would like to portion some into the shorter term, more explosive type of area. So, one of the reasons why I'm showing it here. Another question. Hey, Jeff, why not just wait till the market vibe switches to make trades? Right now, you're making trades with the market vibe at neutral. When the market vibe's at neutral, generally, things go flat or trends don't emerge. And you have a very valid point. The odds are not as strong in my favor to find trend when the market vibe is at neutral. And it's something that we've looked at. It's something that we've tested over time, and it's something we really tested out a lot with the Katy signals. One of the things we found with Katy signals is that, yes, when they were in the direction of the market vibe. So if there was a bullish Katy signal and the market vibe was bullish, the performance of those signals was significantly better. Vice versa, when the market vibe was bearish and we had a bearish Katy signal, the performance of those Katy signals was significantly better than Katy signals that were triggered with a neutral market vibe. But have a decision to make, right? Have a decision to make, because the fact of the matter is the market vibe, in fact, let's see if I can pull it up here. The market vibe can stay... it can stay pretty neutral for a fairly decent period of time, right? So if I come down here to the market vibe, you can see we've now been in a neutral territory for 3 weeks, right? Now, that's a little longer than normal, but if we look over the last, from 2015 till now, and every single trading day, 326 out of the 326 days were neutral, 554 had directional. So what are we talking about? We're talking about 40%, 35%? More like 40% of the days are neutral. So am I going to say, well, I'm not going to do the challenge 40% of the time? No. But it does say something, right? It does say something. It says, look, if I'm going to look to play in the more explosive basket, when do I want to play in the more explosive basket? Yeah, when it confirms with the market vibe, right? When do I want to play in the less explosive basket? Well, all the time, right? It's one where, I want to be able to run the challenge, and the challenge, needs to be able to work, even when the market vibe is neutral. If the market has 2% gain year over year for the next 20 years, it still needs to work. And it still can, with individual stocks. But yes, those odds definitely change there when the market vibe has a different stance. Okay. One question said results of this challenge. My thoughts, and they were getting to, well, if this challenge doesn't succeed or have gains, do I think about it differently than if it does have gains? And that is something that on day one I mentioned that no, it's not the result that I'm looking at, right? And ultimately, the result is what matters. And I get that, and I understand that. And the only reason I'm doing it is for the bottom line result, right? That is the ultimate factor. But to run it once and say, well, you know what, I get a really good result or I get a really bad result, and to hinge any kind of decision-making on that result doesn't make any sense. Right? Doesn't make any sense. I've run the algorithm many times. I've gotten different results, right? And I've talked about the odds of those results. I've talked about the fact that, this has about a 30% chance to really drive huge gains. And the other kind of 70%, it's going to slug around. It's going to slog around just, kind of like it goes, right? And that's what I'm looking for. right? That's what I'm looking for. So if I were to take this in isolation and say, well, you know what, just once, man, do I need to go alter this or that? No, I've made all those changes. I've made all those alterations. You know, I know what the numbers are. I know what the figures are. This is much more for a demonstration purpose and for a, hey, which options, you know, does it make the most sense to, to run with and to go with over time, right? And that's all. So, you know, the result of this, all three baskets are probably going to have a little bit of a different result. In fact, you know, we can see the trades, you know, stacking up just a little bit differently, you know, so far here. You know, this is one where, look, if this test basket turns around and, you know, stacks 3 gains in a row and it's up to 10 grand very quickly, right? I know the question will be, well, why don't we just run with this one? And all of those types of decisions. And I know that the ultimate gain loss on these will kind of influence what some people think about them. But for me, for one, no, it's not going to change. It's not going to change the fact of the matter, right? If the next 5 trades are strong winners, and this goes up to, you know, let's say 15 grand, which it easily could, right? It goes up to 15 grand with the next 5 winners. It doesn't mean that I'm going to say, well, the next challenge, let's just go do this one. No, because I already know it's not a survivable basket. It's an explosive but not survivable, basket. So I have to understand where to kind of fit that in. All right. Now, the last question here was option expiration. The person that noted option expiration to me noted that normally I don't trade much around option expiration, yet made this Netflix trade around option expiration. And you're right. I don't make a lot of trades around option expiration. I don't make a lot of trades on the second week of earnings. Back when, you know, my brother and I were fund managing, one of the things is we analyzed our performances. We noted that our performances increased dramatically. Not just a little bit. Our overall performance increased dramatically if we took out that third week of the month, that Thursday, Friday, and then the Monday of the next day. What was that? That was the option expiration. That was that kind of 3-day option expiration cycle. If we were all cash to go into that and then, you know, got back in after that, generally our performance was significantly better. The other thing we noted is that on the second week of earnings, it did a lot of good for us to just be in cash. It was just one of our worst weeks. Absolute worst week. For whatever it be. You know, for whatever reasons. You know, we looked at some of the reasons why and how and all of that. But they were by far our worst weeks. And so we slowed down dramatically during those time periods. And I still have some of that in me today, personally, and trade-wise, and even with the challenge. You know, I don't. But none of that's priced into this. None of that's factored into this, to the algorithm here. That's a personal bias. Those were on trades where, you know what, they weren't algorithm-driven trades. They were, you know, decisions being made by humans. And, those were just some of the factors and tendencies that we noticed. But, this doesn't have any of that factored in. It doesn't have volumes factored in. It doesn't have, time of year factored in or seasonality factored in. And we could go out and we could factor all that stuff in. And, the more factors we add, the fewer trades, the fewer signals it'll be. That's just kind of the nature of it. And, you don't necessarily add accuracy by adding more factors. Sometimes adding more factors, all you do is, limit the number of signals, but you actually, don't get any kind of better accuracy there with it. So, yes, that is something that personally, something like this Netflix trade, man, making it going into an option expiration weekend and on the second week of earnings, man, I kind of cringe, right? But none of that's factored in here, right? None of that's factored in here, and, it won't be. And look, had Netflix gone the other way and turned into a really nice gain, I'd be like, well, Jeff, your biases are dumb, right? And that's that's one of the things that I've noticed with the algorithm, or we've kind of seen with the algorithm over time, is there's not a big tendency of time period or weekly or this weekend, or oh man, trades that signal on Thursday are better than trades that signal on Friday, or Monday morning is better than Friday afternoon, or Monday afternoon is better than Tuesday evening. None of that has come. None of that is out there in terms of looking at it and saying, "Hey, this is pretty dramatic difference." In fact, the time, the date, the week, none of that has any real bearing on what we've seen in the results of the algorithm. So they're not factored, they're not weighed in here, right? And I think that's important to note. I think that's important to kind of understand there with it. All right. All right, so really good questions that came in. I will try to populate most of them here in the video recordings and question tab over here, and continue to keep this up and running here. But right now, all baskets in cash. Just waiting for an entry signal to get in. Last week we talked about sorting methods. We talked about the ATR method. So how this algorithm closes out trades, how it sorts trades. So you can catch both of those here. The video links are in the spreadsheet. I'll link the link for the spreadsheet. The link for the spreadsheet will be changing each and every week, so there will be a new link. But I will add the new link here to the message feed and make sure that's in each day here this week, and then you'll be able to see the entry triggers that come on in. Now, later on this week, we'll be doing a video discussion about the categories here, as there is a little bit of there have been some questions about what each one of these categories mean. So we'll be doing a video about what these categories mean, and we'll link that video in here as well. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.